We're tuned in to Trends in the Housing Market. I almost got that right. Trends in the Housing Market, episode, I think, 127. Man, do I have a treat and an amazing show in store for you guys tonight, especially if you've been following the trends in the housing market now. I want to thank everyone that's been on the trends in the housing market, shopping trends in the housing market, T-shirts, mugs, and all that. I want to thank everyone for that. I want to thank everyone that's going to be tuning in from northwestern Europe. I want to thank people from Finland, Iceland, that are tuning into the show. It's a big hit up there too. And people across the Commonwealth. It is your Mike Martin's channel, Mike Tonight, with trends in the housing market. Sorry, I'm just kind of excited here tonight. And let me just do a quick channel plug to get you guys on board on what's happening here. Okay, guys, don't forget to subscribe to the channel. Less than 8% of the people that watch my videos are subscribed. Don't forget to go on Teespring. I want to thank everyone that's gone on and bought stuff here like mugs and all this cool stuff. Also, I would like to thank everyone that's been sending me a lot of great messages on Facebook. I appreciate that. Also, if you want to, guys, send me some show tips, go ahead and send them to me here on Instagram anytime. Any show tip, anything, any link, I'll see if I could read it on the show or cram it into a show. So let's go over the website here, or the YouTube channel, of course. This is Randy Patrick, guys. He's got some really good videos. He's got a lot of really good content. Let's go to Article Scan here. He's got some really, really good content out there. He's got Housing Bubble 2.0 foreclosures and filings on the rise. Housing Bubble 2.0, 3.5 million homes still in serious trouble. I think that says that. It says still underwater. Rich homes increase. Sorry. And then Home Bubble 2.0. I think he coined the term Housing Bubble 2.0. He's been out and about discussing the different angles in the markets, affordability levels. He's been talking about migration, exoduses, and what parts of America are accelerating, decelerating. So it's an actual honor to have someone on the show that actually is in the United States that could give us a good insight on what's happening in the markets. So guys, I give you Randy Patrick. Holy smokes, buddy. How you doing?
Hey, Mike. How are you?
It's so good to have you on, Randy. I see your Toronto Maple Leaf shirt on.
Yes, proud Canadian here, living in the U.S. for the past 20 years. So still, that's my team, from outside the Toronto area.
Yeah, I wore a sweater that almost looks like that today. I wish I Skyped you earlier. You would have been shocked. Okay, if you don't mind, maybe kind of jump into when you lived in Canada, when you left Canada, when you go back to Canada, what you're seeing, the changes, maybe if you don't mind.
Sure. I basically lived in Canada all my life until 1999, and we moved down here. And the interesting thing is that I was not involved in real estate whatsoever at that point in time. It wasn't until I got down to the U.S. and again, after a major career change, that I thought, hey, let's take a look at this real estate deal. And that was back in 2003 when I started literally taking courses and, like your typical, see something on TV, go to the event, hang out there. They rope you into some more higher price courses, do the weekend, do the whole platinum program and do the thing. That was kind of my indoctrination into real estate. Then I became a real estate agent, licensed real estate broker down here in Florida, and just been doing, again, not as much retail, primarily on the investment side, the distressed housing side, whatever. That's kind of been the focus. And again, I guess, you talked about Housing Bubble 2.0. Yeah, because I participated quite heavily in the first housing bubble down here. And I can tell you, I remember what I'm looking for, and I know we'll get into this a bit later, but a lot of my Canadian friends were laughing on us down here, thinking how irresponsible people in the U.S. were because we had this housing bubble in our poor economy. And then, what's happened since then. But that's why you're right, Housing Bubble 2.0. Most of the signs that we had back in the day are happening right now. But it's a little bit like Canada too. I think Canada actually, Canada's worse off with bubble, like Vancouver, Toronto.
We never saw a correction. Vancouver was supposed to see a correction in 2010 after the Vancouver Olympics. Everyone said it was going to crash, and the average detached home was sitting just in around 780 to about 800,000 then. Now it's over $1.42 million now.
Yeah, it's
Yep.
ridiculous.
Yep.
Ridiculous. All the foreign buyers, we know who they are, flight capital, all that. So yeah, I mean, things are changed. And as you say, whenever I come back into Canada, I haven't been for the past couple of years, but I'm from the Southern Ontario area. So flying to Toronto, or we drive up and cross a Buffalo, and you see the suburbia just continues to sprawl out. When you're down in the Niagara region, that used to be more farmlands, more space. Now there's all these subdivisions. I'm from Burlington, Ontario, and then that there's no place to grow but north of Number 5 Highway. You go down towards the city, the Big Smoke, and what the first thing I notice is that we see more and more high-rise condos along the waterfront by Lake Ontario there, and more infill. So it's just, it's one big. I look at Metro, you got the city, and then the whole metro area. It's like one big suburb, right? And it keeps pushing out.
It's turned into like a Mexico City.
Yeah, it just keeps
Mexico
expanding.
City is like 40 kilometers across, 50 kilometers across. That's
Yep.
that's what it's becoming, a mega city. But the problem is people are fleeing the inner parts, which are more expensive, and moving outwards. And tell us your commute when you used to live to go to work in the downtown Yonge and St. Clair.
Yeah, I used to work downtown Yonge and St. Clair, so I would jump on the GO train in Burlington in the morning, take the 707 express train to Union Station, take the subway up, get to work by about 8 o'clock, and then and then reverse my way back home. And it's when you're a younger guy, the city's kind of fun, and I learned a lot about the city and this and that. But that was the thing, and you couldn't drive in even at that point in time. Let alone now. I mean, I don't know. I don't even know how people would do it, but it was just that was the rat race. And what I've noticed is, as you mentioned too, is that the home prices are expanding outward, and the people in the city, they're cashing out. They can cash out for 2 million, whatever the number is, and they can come out to the burbs and they can spend $800,000, $1 million, and still put cash in their pocket, and they don't care, right? And that doesn't help. That drives up price points, and then the people who are in the suburbs, they're finding themselves forced farther out into like the exurbs or almost like the sub-rural, and that gets built up again too. I know that people always tell me, "Hey, Brantford's booming now." Well, when I was in Canada, you wouldn't dream of moving to Brantford just because it was so far away from
It was
everything,
Cowtown.
Yeah, now it's all infill now, so.
That's crazy. I wanted to throw something out there that you mentioned, the migration patterns of people, or people buying up in other areas. We're seeing a mass artificial shortage that is basically happening on the West Coast, from all the way from Washington State all the way down to the San Diego, Mexico border. Mm-hmm. This artificial shortage is making homeowners wealthy on paper, but it's also creating this bubble, and not this bubble that's basically pushing people to Middle America. And it's happening in New York State and Massachusetts. And even parts of Illinois is seeing a mass exodus of people, and they're all moving to Middle America.
Yeah, I definitely agree with that. I mean, there's a couple things at play here. Number one, it's your state setup. So high taxes. Well, first of all, people are just having a hard time. In these, I'll call it the coastal cities, like the Seattle, Portland, everything along California, like the Boston, New York, the whole bit. All those in Chicago, obviously being in the middle of the country. But the issue is that it just got too expensive, and then with the high expenses also comes high property tax, and then also high cost of living. So that basically is forcing people to make decisions and saying, I don't have to be here. And what we see migration to either cheaper price real estate so they can cash out, number one, and go, which is a good thing. Or two, what we also see now is the renter phenomena too. In other words, with respect to how COVID has changed the way we work, or the way work from home, or how we do our business now. A lot of people, and I know a lot of even tech companies out in Silicon Valley and stuff have told their employees, you don't have to be here. You can work someplace else, and we'll respect that. So people are now moving to, we'll call it the Texas area. People are moving into Salt Lake City. Exactly.
From
Salt
Seattle.
Lake City. Yep. People have moved into Boise, Idaho. People complain in Boise that they're getting outpriced now because all the Californians are coming in and buying up there. You know what I mean? So it's just interesting seeing the shift. Now on the East Coast side, we basically have mass exodus coming out of the city of New York City,
yes,
the New Jersey area. New Jersey is one of the highest tax locations. When you got state and local taxes, you add that in. One of the things that happened with the last, I guess you could say, tax amendment to the tax laws a couple of years ago was there's a cap on at least down here. And I don't believe that was ever available in Canada, but down here you were able to write off your mortgage interest.
Oh, in Canada you could never write off anything.
Yeah. So down here you could write off your mortgage interest on your taxable income. And what they did is they cap that now. So basically, you can, I think write off up to $1 million or whatever the number is. So people are going, well, if I buy over $1 million or whatever the number was, I forget. There's no point here. So let's move to non-state income tax states like Florida, like Texas. So a lot of the people in the Midwest and the Northeast are moving down south. They get away from the cold. They get away from the high cost of living, and the taxation is just so much better.
And Puerto Rico is another place that a lot of investors have been moving to too.
Well, Puerto Rico is basically tax-free. I mean, it's incentive, So now the issue with Puerto Rico, though, is the fact that a couple of years ago it got slammed with a major hurricane. So where how the rebuild process is going, I don't know. But yeah, there are a lot of people, and there are a lot of wealthy Americans who have changed domiciles, either gone to to Puerto Rico or a lot of U.S. Virgin Islands or Cayman Islands, things like that. They just would, what? I don't need to pay these taxes anymore. I want to preserve my wealth. So a lot of that's going on.
Yeah, you would think that pricing would be slightly correcting, if not maybe dipping, but we're seeing undersupply on the market. From what I've been looking at a lot of charts. I'm not sure if that's what you've been getting on your end, but I've been seeing a major undersupply, which is actually forcing the prices up of homes. And you got some states like Texas, and I know Arizona, and I know which is the other state, and I think it was Alabama, where they're seeing these record prices that are going up, and sales are up anywhere from 6.5 to 28%, better than like 2 years ago or 3 years ago. In record sales. How is that possible?
Well, as you said, you nailed it. You nailed it on the head a second ago. It's the low supply of inventory. So basically, what has happened is, as population grows, there's only so many homes out there, and builders just can't build fast enough. And since the last housing crisis that we had in 2008, what had happened in the home building market, you have skilled laborers who actually left the country. And those were cheaper labor. So now home builders are faced with higher cost of land, higher material costs, higher lumber costs, higher entitlement and development costs. Just everything is expensive now. So thus, they're more expensive, and new homes, when you compare to existing home prices, they are more of a premium. So they're not building as many as they could. Apparently, if you look at what the analysts say, we need like 4 million homes to pop up overnight, and that would satisfy the need right now. But we don't have that.
But what about the rumored 11 to 22 million empty homes?
No, I don't think we have that.
Okay, because I read an article about a year and a half ago, and in California alone, for every one homeless person, there's 4 empty investor units that are sitting.
You know what? I don't believe that at all. I mean, I think there was some talk about that back in the day, but the whole thing now is, the investors, that's the biggest threat to the U.S. housing market right now is the institutional investors. That's the issue, is because what they do is they've got what they call dry powder. They have billions and billions of dollars. And, I participated quite heavily in the last housing crisis from all perspectives as a buyer, seller, real estate broker, investor, the whole bit. My biggest takeaway was towards the tail end of the housing market, when we were kind of in the trough, hedge funds, big time investors realized that, single family home is the next really good asset class. Yes. And they started buying, and they bought a whole bunch. And where they are today is they're waiting for the next housing crash to happen. It'll be controlled, and it is controlled at the moment. And if you take a look at who was buying back then, well, where they are today, they've got billions and billions of dollars, as they call it, dry powder, waiting to be deployed, and more.
I like how you say that, dry powder.
Yeah, that's how they refer to it. Yeah, they refer to as dry powder, right? Just like the gunpowder, right, waiting to get lit, and that's the biggest threat. But I mean, I can tell you when you respect to low inventory too, like in certain markets. I mean, that's the problem is that it's a controlled environment. So the last housing crisis, if you take a look at where we are, let me step back right here. So housing prices have we're about 21% above the last where we are today value wise compared to the previous U.S. peak, which is back in 2006.
Right.
So we're about 21% above that peak. So we had peak, we troughed down in 2012, and we're back up to over 20% from the earlier peak. Now wages have not kept up with that. So that's why when you take a look at it, it's disproportionate. Mm-hmm. And the reason why housing has increased is for two reasons. Number one, the powers that be held onto all the foreclosures and the distressed properties, and they didn't put them back out in the market because that would flood the market with more inventory and lower price inventory. So, of course, the market wouldn't recover, right? That was number one. And number two, with the sort of entry of all these institutional investors and big money, a lot of the lenders that had all this, we'll call them real estate owned inventory that were foreclosed on that they didn't put out, they sold in bulk packages to these hedge funds and these mm-hmm. real estate investment trusts. Mm-hmm. And what did they do? They bought, thousands and thousands, tens of thousands, hundreds of thousands of homes, and they, of course, convert them into a rental property. They don't put them back in the market so you and I can buy them. They convert them to rental property. So that's what's happening. And so where we are today is, the market's being controlled. We've got home builders can't put enough homes out there, can't build them fast enough, and also the price points are too high. There's the segment that needs the most inventory is the affordable housing segment, the sub 250 level. That's where we need the most we'll call it real estate out there, and that's where everybody plays. All the investors play. That's the rental homes. So that's the sort of like the sweet spot. So you have everybody's vying for those few properties, and that's why we're tight right now.
I saw Portland fall about just a few months before COVID hit. September of last year, I saw Portland fall at 407,000, was the tipping point of Oregon, and mm-hmm. and then you started to see people moving east faster and that was the 407,000 mark that they talk about. We saw it happen in Washington State when Vancouver, British Columbia in 2016 in the tail end introduced a foreign buyers tax. Mm-hmm. And I don't know if you checked the graph in 2016 tail end of Seattle, King County, how the housing went up like 40%.
It was skyrocketed. Yeah,
it went crazy. And then California has been kind of picked apart over the last 20 years. It's been happening many years in California. But now this movement into Middle America. Now I want to throw in a question there from Liberty Returns in the comments saying, Randy Patrick, why do you think they're suppressing the supply?
Because they can. Yeah. So number one, but because Wall Street, I really believe that the government and Wall Street wants to convert us into a nation of renters. It's one of those things, and I think that's long-term plan too. I do believe that depending who's in power from a government perspective, that you're going to see more government participation in housing, which is not a good thing.
No.
All right. Like even right now, we have these foreclosure, sale, and eviction moratoriums on right now.
Right. That's correct.
Right now, like the normal process of real estate where you would have people going into foreclosure and getting evicted, and you'd have transition and more properties coming in out of the marketplace. We don't have that. So when you have, with respect to, to directly answer why we have problems with inventory is that you have COVID. So people decided, number one, I don't want to sell because I don't want to engage in open houses and people look at my property, whatever. So people pulled back for selling, number one. Okay. Two, we have low interest rates, record low interest rates. And when you add that in with high property values, what's the number one thing people do? They do cash out refis, right? So the refi business is booming. Okay. So I look at anybody who refis right now, they've made a decision that they're not going to sell for two reasons. Maybe they're going to stay put. And also if you sell today, where are you going to go tomorrow? You're going to go to a place just as expensive. So I don't think you get to benefit out of your equity. You know what I mean? So it's so people are pulling their equity out and using it to make ends meet or do other things. So that's less people out there. And you've got less, again, because of less stuff coming on with these foreclosures and eviction moratoriums, you're getting it from both ends, you see? So there's no inventory, which is causing us stress.
That actually is allowing me to pose this question to you. Because you're down in Florida, and I do spotlight a lot of Florida on my channel, showing people the average price. A garage in Toronto for $1 million, what you could buy in Florida for $260,000 is just.
Yep.
So can you help people in Canada? Because you're Canadian and you are in real estate. If people want to move down from Canada to Florida, can you help them find a property?
Certainly can, but I'm going to make a comment here, and it's tongue in cheek. Canadians can't pull the trigger, okay? And I talk to a lot of Canadians, but it's Haman and Han and whatever, and it's because we're a little more of a conservative culture, and they're missing opportunities. But that's I'm making a point clearly, but I've talked to a lot of people, and what they're telling me is the fact that, and you have to believe this, because in Vancouver and in Toronto, you can't buy property to rent. I mean, it doesn't make sense. You're going to spend $1 million. How are you going to cash flow $1 million, right, on a home? You're just not going to be able to do that. So basically, I think the rental market is dead for the average Canadian, right, who wants to buy property.
There was an article that we brought up a few times on the show that the city of Vancouver declares $3,700 as affordable housing, or yeah.
Well, you take it. Let me get something here. Where is that here? So San Francisco's okay. That's for renting a house, right? Mm-hmm. Okay, yeah. I was gonna say, because in San Francisco, $2,800 is the going rate for a 1-bedroom apartment. So
Yeah, that's $3,700 for a 2-bedroom apartment. Sorry, it was a 2-bedroom apartment. They were $3,700. It's considered affordable living. Yeah.
Okay, yeah, which is one of the most expensive places in North America. Then I guess you'd say that would be.
Oh yeah, Vancouver's severely overrated, and I noticed I left the city of Vancouver myself and moved 2 hours inland, in the Rocky Mountains. It's beautiful where I am. I mean, it's God's country. I'm grateful. I live in a small town. We have all the amenities we need. I'm happy. I'm close to other major cities, but myself, and others here have driven the prices up here also, right? In the cul-de-sac I live in, I was the first guy 4 years ago to be from Vancouver. Now my entire cul-de-sac is from Vancouver.
Really? Wow.
So it's changed so much in such a short time, right? So we're seeing this, and that's why that video I put up I'm getting a lot of shellac from a lot of people, that middle America, some states and a lot of cities are going to see a 40 to 100% increase in housing in the next year or so. I wholeheartedly believe that a lot of the housing migrants that are leaving these overpriced cities will be flooding into these cities, right? That's how I'm feeling, because I've been seeing these patterns. Now, let's stop the press for a second. I got the article open, and then I got somebody 3 times in the comments mention it, so I need to bring it up, okay?
Okay, sure.
In New Zealand, okay, let me bring it back up now. Sorry, it's been, okay. Hi, Mike. Housing prices have increased 19.7% in New Zealand in the last year, and the median benchmark price now is $725 large for the average 2-bedroom shack.
Whoa.
Now, Randy, if you see the house, you're going to look at and kind of put your hands on your temple like this and kind of look and say, you're going to pay $725 large for that? That's how bad it's getting. And when you brought up earlier a nation of renters, where Canada, that's what's happening in New Zealand. They have per capita more people living in cars, per capita.
Really? Oh,
and they have more people, and it's all New Zealand proper, born and raised.
Mm-hmm.
And that's
what. So are they getting foreign investment coming and buying these things? Or
huge.
Yeah.
It got so bad, Randy, that 2 years ago, the Prime Minister Jacinta Ardern and the Housing Minister of New Zealand, Phil Twyford, put in a law to ban foreign investing.
Wow.
They had to. But the problem is, Randy, they're in a position right now where the local, the New Zealand proper can't buy and the New Zealand proper that owns can't sell because no one could buy it.
Yeah.
So now they're in this stagnation of situation now where the people local can't buy, but the people local can't sell because no one. So they're in this Japanification right now in these high-priced homes. Mm-hmm.
Well, what they probably need now is they'll probably have multi-family construction going on. That's going to be the next wave to hit them probably, because if there's a plethora of renters and they can't buy single-family homes, then what you're going to find, people are going to develop multi-family, 3-4 story 100-unit complexes type of thing. That'll be that will happen. That'll suck up that renter potential right there. That's what happened down here. I mean, the past couple of years, you turn a corner and suddenly there was a new, little apartment complex going up. And these are not like high rises. They pretty much are 4 stories, a couple buildings, maybe housing 100 to 300 units. And that's the infill that's going on. Any piece of land, that people can develop, suddenly you look at it, it's been sitting there for 2 years, treed, then one day, bang, it's cleared, and we see apartments going up,
Mm-hmm, mm-hmm. So, okay, let's talk about, I really want to get this out of you, cities to avoid. Give us off the top of your head from what you've been researching. What cities do people want to avoid if they're exodusing those cities that we've mentioned, like California, Oregon, Washington State, Massachusetts, and New York? What states do you think people should avoid?
Well, here's the thing. I mean, I look at some of the information, and there's a couple of things. So if people want to know what's going on, like migration patterns, you can go to like U-Haul has a website that shows some of that. Atlas Van Lines have websites. Okay, so now they every so often they may only publish it once a year. So I mean, you can look at 2019's migration now, right? Mm-hmm. But I've got some stats from a couple of consultants here. And what we're seeing is that coastal thing. So if you look at the West Coast, people are leaving Seattle, they're leaving Portland, they're leaving the Bay Area. So whether you want San Fran, Oakland area, Silicon Valley, that sort of metropolis there. Obviously, the south, the southern area of, where Los Angeles is, that kind of area. People don't leave too much in San Diego. People like San Diego. That tends to sort of hold, and then they're and also Vegas. I mean, clearly people are leaving Las Vegas because of what? All the shutdowns. The entertainment industry is dying out there, and a lot of the workers there are leaving. So they're moving, and they're finding themselves in Boise, Coeur d'Alene, Salt Lake City. Utah is a big place for relocation. People are going to Phoenix. So the complaint in Phoenix is that every Southern Californians are just they're cashing out and they're just driving a few hours and they're relocating to Phoenix, and that's Phoenix has been the number one, we'll call it, month over month appreciation. I don't know if you guys follow this at all, but there's there's a housing index. It's called the Case-Schiller U.S. Home Price Index.
Yes, I do look at it.
It's okay. It comes out. It's a drag along. Like it's usually a couple months, in arrears because of the way they do their calculations. But I kind of follow that, and Phoenix has been the number one, year-over-year appreciation for the past few years now. It's always been strong because of that. People are leaving Denver. Okay, they're actually leaving Denver now because Denver's gotten too expensive. Where they're going to Dallas-Fort Worth area. They're going into Austin. They're going to San Antonio. They're going to Houston area, right? That area. People are leaving Minnesota, like Minneapolis. Minneapolis has gotten too expensive now too. Chicago, for many reasons, whether it's tax or crime or quality of lifestyle, whatever price points, they're leaving the Midwest. Indianapolis is a big place now. Okay, people are going there. Tennessee, people like Nashville. Nashville's growing. Memphis is growing, right? And you got the Carolinas, Charlotte. You've got Raleigh, North Carolina, it's a boom now, and so you've got a lot of the East Coast for Boston, the whole New York City area, Baltimore area, Washington. They're coming down to the Carolinas. And of course, Atlanta's always going to grow. Florida, we're seeing, obviously where I'm in the Tampa Bay area, so we're seeing Tampa, the Sarasota area, up down to the Fort Myers area, and then obviously you'll see it in Orlando side and Jacksonville. Jacksonville is a little more inexpensive, so people are relocating there. So it's just a matter of thing. But where, like when you talk Middle America, I can tell you that a lot of it is not necessarily going to be like, I'm just highlighting the big cities here, kind of off the U-Haul analysis. But where things are going on is the Middle America. It's the Tier 2 and Tier 3 cities. Mm-hmm. So it's going to be like a Columbia, South Carolina, Spartanburg, Tennessee. You're starting to see these locations are becoming more popular. Because
Ocala, Florida is getting popular, and it's north of Orlando, and that's starting to pick up.
Yeah, so all these locations, because they're not maybe true metropolis, but they've got enough, good price points, good schools,
amenities,
enough things to do, amenities, exactly, and that's attracting. And now, when we're in that world of, hey, maybe I'm working from home, or maybe I'm, I don't have to go to the office, or if I do need to go to the office, I can go farther once a week or once every 2 weeks. I can go farther out. I'll deal with my commute one time as opposed to 5 times a week, right? Mm-hmm. So people are, and there's a real big push on that. A lot of the, like the Redfins of the world, whatever, down here in the U.S., they do some analysis. They say, yeah, their online searches for, suburbia and even past suburbia is skyrocketing, where their urban stuff is really down. You see,
Right.
so. But again, I agree with you. It's the fact that it's not in the Middle America, but it's not just you'd avoid a St. Louis, but you'd go to maybe a Springfield or something like that, or
Yes.
Kansas City. You know what I mean? So you're looking at a tier 2 type city, which is becoming much more attractive.
Yeah, you got primary cities, secondary cities, and tri-cities. And
Yeah.
you get further and further out to become not really suburbs, but become villages and towns.
Yeah.
And a lot of them are not incorporated, but
Yeah.
those places are seeing a lot of action. I had a nurse friend that watched my channel for many years, and for some reason she was convinced after watching we did a tour of South Florida. On the channel, we were like opening pages and talking about places and stuff. Where I used to live in Florida, I would show people. And then she liked Ocala, Florida. She's a nurse, a registered nurse. She got a job there in a clinic, and they offered her a little bit less than what she made in Canada, but she ended up buying a house for $160,000.
Yeah.
Where if she was to buy a house like she says, like the house she has, if she was to buy that in Vancouver, it cost her probably $2.2 million. So,
Exactly.
So there's no question about it, right? And that allows you to get a better maybe life insurance policy, a better healthcare policy. It allows you to upgrade better things in life so you can live a better standard of life, right?
Well, and she comes down here too, and she's not paying state tax
Right.
on her income. Even better, you see, and that's why I don't know. We want to make a hockey reference. That's why, the Tampa Bay Lightning, the Florida Panthers, it's kind of like their guys will sign contracts that maybe aren't they're good contracts. They're not as maybe rich as like the Leafs or something like that. And the reason because they can factor in, hey, you're not paying provincial tax down here. You know what I mean, or a New York State tax. So money goes farther.
Randy, you know what they're paying for property tax on those stadiums? Oh my God.
Yeah, it's huge, isn't it?
Oh my God. Property taxes. Okay, let's jump on to property taxes rising. We got little boroughs, we got little towns in Illinois where property tax went up 26%, 32%. Like I was floored when I was watching like little news channels from outside the big cities there, up in the Northeast, up in Maine, up in Massachusetts. They're paying property tax up the yin yang up there.
Yeah, it's expensive. Vermont, New Hampshire area, Maine, very expensive. Illinois, expensive. I mean, I got a list here. Just, basically the most, I'm prepared, Mike, so I'll just, which is good. Basically here, I just looked at this up, and I've done this a few times, but like New Jersey is the number one place for taxation. Okay, that's the worst. New Hampshire, Texas, this is just property tax. It looks like Nebraska, Wisconsin, Illinois, Connecticut, Michigan, Vermont, and North Dakota. All right. That's your high property taxes. Now, on the flip side, your low property taxes are going to be, Louisiana,
Yep.
Hawaii, believe it or not, Alabama, Delaware, D.C., West Virginia, South Carolina, Arkansas, Mississippi, New Mexico. You see, so it's just a lot of it. Seems like the north is expensive, south is not that expensive. But then again, when you start blending, like a New York State. That's one of the most tax. When you add state, local taxes, and income tax and property tax, like that's the most taxed location. That's why they're moving out of the New York, New Jersey area for sure.
So, Randy, let me ask you something. What's going to happen to cities like Chicago that have 4 layers of government and they have 4 layers of pensions on the hook? What's going to happen to cities like that?
Well, that's the thing. I mean, they're just going to have to keep raising property taxes to accommodate that. That's the problem. So the people that are going to stay are going to get hit twice as hard. I mean, there's no other way about it, And that's again, it's the pensions. I know that I was reading about that too. The Illinois pension, like how do they fund that? Right? That's a big issue.
4 layers of government.
Yeah, there's so much, and there's so many people there, so it's a very expensive proposition. Now, we'll see what happens. I mean, it's the state's having a lot of issues, but still, I mean, this is where we see some shifts. So if we see some property, devaluation going on, then people will go, oh, maybe I can buy back in the area, and then start establishing some more income for the state from the property perspective. Because again, even though it's heavily taxed, a lot of your mill rates typically based on your value, and that's the calculation, your property value. So if property values drop, at least there's a break there, but might encourage more buying.
Well, but if the taxation doesn't fit, I mean, okay, so let me ask you something, Randy. When people want to move in now to the Northeast, let's say we got people moving in, they're doing a cash flow or their total debt service ratio, they're calculating it. Once they factor in those taxes, a lot of people can't even afford to move into these places.
Yeah, but my point though is that if property values decrease, like other words, there's got to be a big enough offset on the value of your home that so you're
Right.
getting better bang for a buck, but and then that new value, like other words, when you buy at $100,000, that's kind of like your new benchmark, right? So say previously it was worth 150. Well, that was the benchmark on the taxation level, right? You come in at 100 now, then they get to reset that, right? You're not paying
Okay.
at the higher value. You're paying at your market value. You
That's
see,
really
your
good, Randy,
assessed value.
because in Canada, unfortunately, we don't have that. Property tax just keep going up. Let me tell you a water tax we have in some cities in Canada. Are you ready? You're not going to believe your ears when I tell you this. In the city of Brampton, Ontario, the citizens of the city were issued a letter in the mail of some sort of water tax. So now listen to how this water tax works. It's a drainage tax. So when it rains, the water that flows from your driveway to your sewer or like local sewer system like that it catches, you actually
Yeah.
have to pay for that water.
Oh, nice.
I'm not making this up, Randy. You
Yeah.
can't make this stuff up. So now it depends how now they've got these people going around the city measuring the width of people's driveways, and they would do some sort of mathematical equation to kind of feel out how much water per year or precipitation they'll have flowing down the driveway to add more tax to this
Oh,
water
Lord.
tax.
Wow.
You can't
Well,
make this
people,
stuff up, bud.
that's out of control. I mean, that's for me living down here in the U.S. now. That's all I hear about Canada is just, how many more ways are they taking money out of your pocket, right? Whether it's property, stuff like this, carbon tax. When I go back home and I come across the border, you got to stop at duty free and buy a case of beer, right?
Hmm.
Other words, other than that, or it's $48 at the beer store, whatever the price is these days, right?
Oh,
So,
48 is actually nice. It's like 56
okay.
now.
Oh, are you serious?
Yeah, it's
Oh my
gone up
goodness.
big time. 56 for a 24 Molson Canadian.
Really?
Yeah.
Well, I can go to my local Costco here and get probably 24, again, Budweiser or Bud Light for like about $18.
Hmm.
So, you
Hmm.
know, if you
Well,
want
you
to
can
drink
pick up
that, of course.
Heineken for under 30, 24 for Heineken.
Oh yeah, yeah, Costco's like $26. Yeah,
Okay, that's really good.
yeah.
Um, okay. So Randy, let's talk about. I know we're going to year's end. We're approaching 2021. I'm just so scared to say 2021 because 2020 has been the absolute biggest disaster
Hmm.
in probably recorded history in the last 100 and something years. When it comes to whatever you want to talk about, it's a complete disaster. 2021. What do you see happening? I mean, do you see this mass exodus continuing? Do you see what do you see happening with housing in 2021 in America?
Well, right now it's still a little bit up in the air, and the reason I say that is again because we're controlled. So my forte or my focus has always been on the distressed housing market. So I like the foreclosures. I like to do the short sales, things like that. You know what I mean? And that's when you bring those properties back on the market, it certainly helps people achieve the dream. They can buy cheaper, more inventory comes on, you're moving people around. So it's good for the economy. It's good to get things moving around. So, we still are under these moratoria for evictions and foreclosure sales. Now, some things have changed,
Okay.
but the end of the year, there's two big moratoria, that's plural, I guess, that are going on right now. You've got the FHA, which is Federal Housing Administrator Authority. They have any FHA-backed loans. They are not allowing evictions. If you're a tenant in a home with who owner has an FHA mortgage, or if you were currently being foreclosed upon, your foreclosure was stopped. Okay,
This is
so
federally backed, right?
fairly back, yeah.
Okay.
The government insures that mortgage. Okay,
In
so
Canada,
but,
CMHC.
yeah, similar thing, yeah. So the government insures a mortgage. So they put out their rules saying, they had these moratoria, and then of course it got extended to the end of the year. Then each state may or may not have their own moratorium going on. Our state in Florida declined to renew theirs because they said, well, we're just going to fall in line with this other moratorium that was put out there, it was by the CDC, Center of Disease Control, out of Atlanta, and they put one out, and that was basically designed really to protect tenants. All right, and some of the issues that we've dealt with is the fact that obviously some people have not paid their rent since April, right? And they're going how many months now? So landlords are getting beaten up. Landlords will try to evict, and the tenants, the tenants didn't have to prove anything, no hardship approval or anything. So this new CDC moratorium puts more onus on a tenant to say, hey, during the eviction process, like my income's been affected by COVID. Here's, and show that, and you do some things. So just so you know, but what that also has done is open up more. It's opened up more for the foreclosures to happen. See, because it's more tenant focused. So my expectation is that if we see those moratoriums lifted, we're going to start seeing waves of foreclosures coming at us now. All right, and that's the opportunity right now. Opportunity to step in and grab some property, possibly get some cheaper property. I can tell you that all the hedge funds and the investors are going to be vulturing on that, and they're waiting for this. So that's number one. Two, I think that interest rates are about as low as they can go, and I do believe that at some point in time, the general public is just going to say, we can't afford this anymore. Because that's what's happening. It's perpetuated. So, having these FHA loans, like for example, you remember what was called the subprime mortgage crisis back in the day, right?
That's correct. I was living in Florida at the time.
Okay, so you're well aware of what happened. Well, today we don't really have a true subprime market, or it's not really called subprime, it's called non-prime. But the number one, I guess you say, subprime loan is a government-backed loan. All right, it's an FHA-backed loan because the standards are less. So all the pro-housing hacks, that I call them the housing, I don't know if you've heard this, but I'm referred to as a housing bubble bro. And because I'm pro housing crash, not pro housing crash. I'm just saying that we're in a bubble. We're going to have some problems. And there's the housing hype hacks who are saying we're not going to have any issues, right? So all the pro housing, everything's great. People are saying, well, we have such higher lending standards now that we're not going to have these problems. Well, the number one loan that's being issued these days, the past couple of years, is an FHA loan. Right. And the FHA loan allows for a lower credit score. It allows for a lower down payment, only 3.5% down payment. All right.
So this stops people from wandering to secondary lenders and shadow lenders and all this other stuff, right?
Well, a little bit, but what it's doing though is it's actually fueling the housing bubble. That's the point here. So if we have low inventory and prices are rising, and and you add low interest rates with a low down payment, there's the debt to income ratio. So the FHA loans have something called the QM patch, right? It's a little government bonus. QM down here stands for qualified mortgage. So in other words, there's certain standards when you qualify for a mortgage. Well, this QM patch allows those standards to change for an FHA buyer and actually make certain things more risky. So the government's incenting people to keep buying at the top of the market, to keep buying with low down payment, higher risk. Yeah. And in the end, when you think about it, the actual home buyer has less skin in the game. All right. Mm-hmm. And that's a situation. So that just perpetuates and fuels the housing bubble growth, which is going to cause problems. Okay. And that's the number one loan program right now.
Randy, I got something now. I got something I want to throw out, and this was from 2 days ago. Uncle Biden is actually throwing something out in California, and it's the first time loan home buyers, home buyer loan. Now, let me tell you how that worked out in Canada, New Zealand, Australia, and parts of the United Kingdom. United Kingdom didn't do too much first-time home buyers. The UK did more interest-only mortgages, and Australia did half of Australia did interest-only mortgages and first-time home buyer grants. Now, Uncle Biden is trying to give these grants or these first-time home buyer loans, and it's been an absolute disaster in Vancouver because not only did it rally the market, it potentially put more people at risk because if you can't afford to get in the market and buy, why the hell are you going to take more money to come into a market that's at the top, like you were saying earlier? And Matt, do you know anything about that, Uncle Biden's first-time home buyers? Because that's going to be...
I thought it was a credit, though. I didn't think it was I think it's a first-time home buyer credit, okay? Which would be on your tax, I believe. Okay, but either way, like it's 15 grand. That's what it was, right?
15 large.
Yeah, 15 large. And yes, I mean those programs don't necessarily work. And as you said, I think it's giving hope to a segment that needs to have some hope, which okay, you have to do that, and I get it, but it's not well thought out. And if it like again, it's kind of like when you have lower interest rates. So in other words, if today, if you qualified for a $200,000 house, but tomorrow if rates drop and now you qualify for a $225,000 house, all right, your buying power is increased. You can get a cheaper house. You just were allowed to bite off more than you can chew. You see, and that's how it's always portrayed. So whenever we have drops in interest rates, there's always articles that come out and say, oh well, this many more people now can refi because now that lower rate extends the opportunity for more people. Same thing on the buy side. So I talked to a guy literally the other day on the phone. He was asking a question, going, what should I do? I have a contract on a house, and he was I guess you say he was a little upset, going, had we moved earlier in the year in January, we could have got this for $250. Now it's $270, but my payment's the same because of interest rate. And that was our discussion. It's like, well, yeah, your payment's the same, so you can afford more, but in the end, you're still paying more for that property.
Yeah. And
when you take a look at amortizing that over 30-year mortgage, or whatever, how much more interest are you paying on that extra 20 grand? You see? So, that I guess it's all a financial calculation. But I think that, and that's when I sort of mentioned about government. I think as time goes on, for 2021, we're going to have more government participating in our homes and in our real estate business, which they shouldn't.
And Randy, I'd like to add to that, please. In Canada, the government has involved itself in almost every aspect in the housing market here. Australian government, same thing. And when you have an article that was put out a few weeks ago that 80% of Canada's GDP is based on housing. I had, that article's up. I made a video of that because that's a huge deal. And when you got countries like Australia, New Zealand, Canada, and the UK, that their underlying economic move or their economic consumption is housing. We're not producing anymore, so we're consuming. And Canada's way out of this is to bring in more migrants because they can consume, and if they consume housing, they consume water, they consume food. They're going to keep more other businesses in business. But it's a very dangerous path that Canada has taken with that, and the government is in everything like housing from the top to bottom, and unfortunately, they've deregulated a lot of laws that were put into place to protect the Canadian. They deregulated a lot of laws for money laundering. Now, Randy, you're not going to believe the amount of laundered money Canada has laundered in the last 10 years and shadow flipped through real estate. It's absolutely phenomenal. We had a task force for the RCMP that was shut down about a year ago that they uncovered from 2010 to 2014. About $300 billion laundered through Canadian real estate, right? And Australia has a big secret. They don't even want to talk about that. People with hockey bags full of money going into casinos and buying those lavender chips, hanging around for 2 hours and then cashing out with a check. A lot of casinos have been part of it. And it's just like nothing is happening. They shut down the money laundering investigation, saying it's gonna put too many, it's gonna risk a lot. I don't know. They just shut it down. And now we're pretty much sitting ducks here in Canada because we can't, the average wage earner from 49 to 79 to 100,000 can't afford to get into any of the major city markets where the jobs are. So a lot of us are pushing to the U.S. or looking to the U.S. as an option now because it's so unobtainable and unaffordable here. Now, I know I speak for the New Zealanders and the Kiwis and the Australians. We've been going through absolute hell And I keep telling people how lucky you guys are in America. You guys could go and just, the average wage earner could get a decent home, start a family. Randy, it's damaged us so much here that people are holding back on having families. People are holding back on getting married. People are holding back on starting a decent, like an average life, because they can't even afford anything with an average wage anymore. And this is how the housing has crippled us so much that it's displaced and forced so many people into homelessness that I don't even know what to say anymore. This is episode 231 or 232 of Trends in the Housing Market. We've been connecting these dots across the Commonwealth, and Randy, I pray that this does not happen. Okay, it's already happened on the West Coast. It's happening in New York. It's happened in Massachusetts, Illinois, places like that. I just hope America doesn't get engulfed in what we've been engulfed. And you telling me that there's going to be more government interaction, this is going to be so damaging for the next couple of generations that people are already going to be programmed at a young age saying, oh no, housing is only for rich people. And people are going to accept that.
Well, I agree with that, and that's the key here. So it's really pushing back, and but I guess how can I put it? If you see it coming, you can work around it. I guess that's kind of my point. So my biggest takeaway from last housing crisis was watching all these big firms, and we sold to them too. Like our short sale deals, we sold a bunch to America Home for Rent and Waypoint and the Blackstone Group because they were cash buyers and they're paying, right? So why not? But where I am now, I'm like, this is like they're waiting for this. They're waiting for this market to crash so they can swoop in and convert us to a nation of renters. With respect to the government, as much as I try not to be political at all in my discussions.
I honestly.
No, Mike, I do not talk about this because down here, and there's probably U.S. people watching now too, but the past few months it's been so polarizing with the election, and regardless like of who you're voting for, Facebook, Twitter, fact checking, fake news, the television stations, like it's been so polarized, and I don't even mention it, but and fortunately some of the stuff that has been tabled with the stimulus bill. Like it's one of those things when they're working that stimulus thing that sometimes some of the parties try to jam through other stuff, and and one party tried to jam through some housing things. And I actually saw what they proposed. It was ridiculous. Now it didn't go through, obviously. Well, it basically was. They wanted longer eviction moratoriums. Okay. They wanted more rights for renters. And then they also, this is the scary thing, they wanted renters to be able to earn an equity position of ownership in the property based on terms. So in other words, if you were to rent a year, you got 10%. You rented a second year, you own 20%.
Of the property.
Of the property, yeah. So just stupid stuff like that. And that's what when I saw it, I was like, oh Lord. So it just, that to me is like the ultimate fear. If it, like, again, that just was stuff they threw out and it got shot down right away. Okay. But the point though is that it's being tabled. It's like people are actually thinking that way. So the free enterprise is gone, and it's to the point where it's like, we don't care. But if you see how this plays out, it's almost like if Wall Street has all these properties, you know what I mean? And then it doesn't really matter anymore. You see, that's kind of like, if you think about it if we're all renters, then everyone's the same and it's easier. Let the big corporations manage all the properties. Let the big corporations buy them all. Let the big corporations return 7, 8, 9, 10% every year to their investors, you know what I mean? And then let us just be tenants. It's a cleaner way of thinking. And that's where I think they want it to go, because you don't have to deal, with all these bubbles and things like that. Like when I start delving into it, I actually get kind of scared, thinking, we're going to be in for some problems if it goes down that way. So for me, it's like you got to fight the fight and make sure that this stuff doesn't happen. And for as much as I'm we'll call it housing bubble proponent. Now, housing bubble is not necessarily a good thing, because what do bubbles do? They pop, right? Like no bubble just slowly deflates. They pop at some point in time, and they reset. And when bubbles pop, people lose, and they lose money, and the families break up, they lose their homes. Like, it's a bit of a mess, right? So I'm not a proponent of the carnage that goes along with that.
Right.
I'm a proponent of, let's get some better pricing involved. Let's bring things back down to earth, because if you think about it, the cheaper the pricing, the more people that can afford a home. You know what I mean? If we have less of these moratoriums, then there's more homes that are out there that people can buy. Okay, and the issue is the fact that the average citizen, whether you're an American in the U.S. or a Canadian in Canada, you can't go to, like, the average citizen can't go to the foreclosure auction and bid against a big hedge fund and win an auction. Number one, because not everybody has 150, 200K cash sitting around to do that. Okay. And number one, most people are retail home buyers. They're not investors, right? They're not equipped to do that, and they want to do that. It's not the home buying process. So you see, what's happening is that all these guys are going to step in, and they're like, if we crash or we have these bubbles, they're going to be first in line to buy all the property at the auction. They're going to buy the property at the auction, discounting, which they like. That property doesn't come back into the market as something you and I can buy. It becomes rental property. So the market doesn't drop in value. So they maintain their asset base, nice high values, but they can still buy the distress at cheaper prices. You see, and so that's how it's being controlled, and they win. In the end, the homeowner loses because they've lost the house. They have to become a renter, and in the end, people who are on the cusp of being renters, of homeowners, can't do it because not enough inventory. And when I go back to talk about the FHA stuff, it's kind of like they give you enough rope to hang yourself. So that's why I have to say, everyone's complicit, you see? So the words, if you like, I literally responded to some local dude down here on my YouTube channel about, he doesn't agree with me that I think it's a bubble. I kind of go, okay, he goes, we have low inventory. Yes. Okay. We're not building as many homes. Yes. We have moratoriums on foreclosure, so people can't get cheaper homes. Yes. We have low interest rates. Yes. So, and now, the number one loan is FHA with lower standards. So, it's like we're encouraging people to go beyond their means to buy,
right?
Knowing that if there's a slight change in the market, like you put down 3.5%, Mike, on a home here, okay? Say you bought a home, okay? In 2 months, suddenly something great happened to you, and you got relocated, and you had to move from Tampa to Austin, Texas. All right, so I better put my home on the market. Well, guess what? You bought your home and you put 3.5% down. All right. If you have to sell your home with a real estate agent, you're paying 6% commission
fees
to sell your home,
appraisals and this and that, and all kinds of document
costs,
fees.
Yeah. So you're down 8% at closing. So you're negative. You can't now sell that property unless you bring cash to the closing table because you only put 3.5 down. You see, so you're technically underwater at that point in time. So you see that's how tight the market is, or the loan process is with this segment. And I look at it going, then you might as well be renting because you don't have any skin in the game, you see. And to me, that's what happened the last housing crisis. That's the subprime mortgage. That's what happened. Everyone's encouraged. It's okay, everyone's cool to encourage these lendings, but no, we have tougher standards. And then, of course, look what's going to happen. We're all exposed.
Those jumbo loans were absolute disaster in the making. Those jumbo loans where they were lending out 110% loan to value.
Yeah,
that was so dangerous.
Yeah.
100% LTV. What? Because you could pay off your credit cards or your car, have one loan, and then they're offering this teaser rate at 1.5%, and then boom, they didn't read the fine print. The rates go up to 4.5 points. And before you know it, their mortgage payment goes from $570 a month to like $2,200 a month, and they're out in the rain.
Yeah, that was problematic back in the day. There's not as many of those out there right now, but it's funny though. Mortgage-backed securities are making a comeback, and some of the adjustable rate loans are coming back as well too. Just because lenders have to lend, right? That's their business, so they're going to think of ways to work around it and get clients in. And you're playing the game, you're rolling the dice. So but I look at it going, it's all like we're all like everyone's complicit to this, right? So there's no one to blame, but I say ourselves kind of ubiquitously. But the government's why is the government keeping rates down? They're before, like after the last housing crisis, to encourage a recovery, they did the quantitative easing. They kept their rates low, and the rates eventually kind of increased a little bit. Well, this time they dropped the rates immediately. They didn't come down gradually. They just dropped them. We're going to stimulate the economy and see what happens. And now we're into this whole COVID mess, which is really kind of throwing a curveball. So
let me throw you a curveball. Do you see us going into negative rates to sustain this?
I can't. I don't. I know that that's been made available in some parts of Europe.
Right.
I don't know what the outcome of that has been.
In Germany, for example, if you have over 100,000 marks or euros or whatever they use there, you have a negative interest rate. If you have over 100,000, now they're going to drop it to 50,000, and you're going to have a negative interest rate. And basically, borrowers get rewarded and savers get punished. Basically,
punished. Yeah.
So
they want you to consume. Yeah.
And that. They're trying to play the angle in Eastern Europe where they could push more money out of the banking and deleverage a lot of these banks and put money back into the markets. And that's what they hope people would do. Well, I'm not going to pay 0.5% on them holding my money. I'm going to take it out and buy myself some gold, or I'm going to take it out and buy another house.
Yeah.
That encourages more spending. And that's what they're hoping for, that people will take this money and go ahead and throw it back in the markets. It has worked, but most people are broke now. They got nothing to their name.
Yeah.
Now, speaking of broke, over-leveraged Americans, what's happening now? Before COVID, there was an article that a majority of Americans don't have $68 or $108 in their account. I wasn't sure what.
Yeah, basically, it's like the majority don't have $500 to $1,000 to cover an emergency. Okay, and that's the situation, and that's just because of cost of living, taxation, property values, the whole bit. And it's just tough. It's tough for people to make ends meet, which goes back down to values, right? So, when the last housing crisis happened, it was kind of like the big reset. Apparently, 2012, that's when we were in the trough. That was the time when property values and wages, like the two lines, intersected. In other words, if you bought at that point in time, then that was the optimal time to buy. But since then, wages it's grown modestly. Mm-hmm. Housing values have skyrocketed. Yeah. And we spoke of this earlier. The average wage earner in like 75% or 80% of the U.S. states can't afford the average price home. You see, so what goes on? I mean, that's the problem. So the wealthy are benefiting. The average people don't benefit. And that's problematic, and that's where then big corporations step in and buy the inventory, you see, and convert them.
But if you look at the backwards effect on this, you'd see that it's the average wage earners that pay the most tax. It's the average wage earners that contribute to the infrastructure. Mm-hmm. It's the average wage earners that actually keep the private sector in check. Public sector. It's the average wage workers that pay the taxes to keep the public sector, and fixing bridges and this and that. And let's jump on real quick. Reverse mortgages in America. That's becoming a huge deal where older people have been tapping into reverse mortgages. Yep. People 65 and up have been tapping into reverse mortgages, and it's leaving a lot of families bankrupt and in financial distress.
That's a big thing now, and I'm seeing more and more reverse mortgages on the foreclosure path right now. So it is what it is, and it's. I look at it going to equity stripping. They're not getting good Social Security payments. Whatever is not working for them, they're dipping into their house, and they're pulling money out to live or do whatever, but they got to pay it back, right? So that's the problem.
So we got okay, guys. We're going to open up the chat now to ask Randy, Senor Patrick from Tampa Bay, Florida. Live questions, guys. So, Randy, it's going to take a few seconds for them to catch up to because there's about 12-second lag.
Yeah, lag time.
And it's so good to have you on. It's so good that you're a white and blue fan there at Toronto. When I used to watch the Toronto Maple Leafs, it was the players were Salmi. I don't know if you remember Salmi.
Boris Salmi, yeah.
Yeah, it was that time.
Yeah. Oh, yeah, I was watching as a kid in the 70s, right? So that was when I first got into hockey. So, yeah, I still got all my hockey cards, too, by the way.
Yeah. Guys, Randy plays hockey. He knows how to fight. Randy's a good fighter.
That's what Canadians do. But you know what? The problem is in men's league, you fight, and then you get suspended for games. So it's costing you money actually. So.
Okay. All right. Let's get a little bit personal with Randy Patrick. I mean, we got a few minutes here. Before we get some questions rolling in, we got quite a few people. Actually, we have more people watching us live than CNN right now. That's really good. Okay. So, Randy, what's your favorite ice cream flavor?
Lord, I don't even know.
Are you a chocolate or vanilla guy? Banana?
I'm more of a chocolate guy.
Oh, you're a chocolate guy. Okay. I've always figured you for a chocolate guy. What's your favorite car?
Car? I used to have a Range Rover. I love Range Rovers, except they have bad suspensions back at least the era that I had them. So.
Okay. Favorite travel destination?
You know what? I'm gonna have to say I've only been a few places. I took a European trip. I thought that Switzerland was the nicest place to be.
Okay. Escape destination, like if you have to take off, or if they're like you have a backup plan in place to flee. What would your destination be if you had to flee somewhere?
Like, why would I be fleeing though?
I'm just saying, like if you had to flee, where would you go? Probably Canada, I guess, or.
I would go back home. Yeah, sure.
Canada.
Yeah. It's tougher to find people up there, right? So.
I was going to ask you favorite sport. We know it's hockey. What's your favorite sport to play? Oh, hockey. Never mind. You play hockey too. Because some people like to watch golf and like to play something else, right?
Yeah. I played basketball a lot as a kid. I like volleyball. My daughter played, varsity volleyball for the past few years, so love getting involved in that. And believe it or not, back in the day in my 20s, we used to play a lot of beach volleyball on Lake Ontario there. So
wow.
I was into beach volleyball. Yeah.
Wow.
That was fun. That's our West Coast because we would get the feeds from the NBC feeds and watch the AVP back in the day, right? From all the guys playing in California.
Mm-hmm. So I got another Skype question. Sorry, I got other questions because we're multi-streaming on different platforms.
Okay.
So I got other questions here, but some of it's in Russian, so I can't read it. Okay, we got a question from Iceland. When will be a good time to move to America? I'm thinking to move to Florida. Mike keeps talking about Florida. Is 350,000 American okay to start?
Yeah. Oh, hell yeah. Yeah. Florida. The nice thing about Florida is that we are a state that still, I guess you could say, has, on the average, has reasonably priced property. All right. So it just depends on where you want to go. Sure, there's going to be areas that are more expensive, but I think for $350 you can get a pretty decent home.
Mm-hmm. Because a lot of people, I get comments from all over there's a lot of them here. This other chat room I'm looking at outside of YouTube, and none of it's in English. So I hope they're understanding. I guess they have to translate, and it lags about 3 minutes behind.
Oh, really? Okay.
Something like that. Okay, we got a question here. Is it a good idea to sell my house in Alberta, take the money that's left over from the sale, and move to a cheaper province and buy a used house and pay cash, no debt, maybe fix it up a bit?
Well, I think you got to take a look at long term. I mean, where are things going to head? I mean, the Alberta. I'm not as familiar with the Alberta market. I mean, the Alberta market was a booming market with the oil and everything. A few years ago, right?
About 8 years ago, and then it crashed.
About 8 years ago, it crashed. Okay, so I guess it would depend on the province. To me, I look at going like opportunity. So, do you just want to go live someplace, or do you want to go someplace where there's going to be other opportunities to increase your income or to do other things? I guess that would be the number one question. I mean, when people, and I guess this is the difference between the U.S. and Canada. Okay, I think a lot of it is based on like flight costs. Like, in other words, it's expensive to fly in Canada, right?
Ooh.
It's big time. My sister lives in Vancouver. When she flies back home, she tells me how much it costs. I can't believe it, right?
Like $1,400.
Yeah, like it's big time. And it's cheaper to fly in the U.S. And one thing I noticed though is that the people in the U.S., they travel more, they fly more, but also I think it's part of the economy and the jobs that you get transferred. Like, part of the working your way up the ladder in a corporation is that you'll work 3 years in Denver and you'll get transferred to Dallas, and then Dallas to Tampa, then Tampa to Charlotte. Like, they tend to be more open for relocation as a means to improve their financial position and lifestyle, right? I think that that's encouraged based on the proximity and how everything works. Whereas where we are in Canada, just the cost to fly between Toronto and Vancouver is prohibitive, right? Let alone other places. And just also, I think there's not many cities in between, right? Like, I mean, you got, you kind of go, Vancouver, Calgary, Edmonton, do you even count Saskatchewan? Then you Winnipeg, and then Ontario,
Thunder
and then
Bay, the Toronto, then that's it.
yeah, I mean, there's the East Coast, so there's a lot of gaps, and I think that really hurts growth and opportunity in Canada and
Oh, it
travel.
does. And we're limited.
Yeah,
Texas has more major cities than all of Canada and Australia
yeah,
put together. So
yeah.
we're I got another question here from Mitch out of Oregon saying, hold on, where did that go? Ask Randy what he thinks will happen when the mortgage forbearance runs out.
Okay, well, when the mortgage forbearance runs out, well, how forbearance works, and I don't know if all your listeners are familiar with that. So people who have, so we'll call them, government-backed FHA mortgages, if they could put a stop to paying their mortgage, that was called forbearance. Forbearance, you call your lender and they literally give you a pause on it. You can get a term. It's 6 months term, another 6 months term. The maximum you can do is 12 months. So once you're 12 months or 6 months up, you actually have to get back to paying your normal mortgage payment. Mm-hmm. There's been a lot of discussion and erroneous information about, well, what happens to all those missed payments. Now, technically, the missed payments they shouldn't hurt your credit. They're not gaining interest. There's no penalties, but they have to deal with it. You see,
they chop it up and just put it at the end of the amortization.
Well, that's what people would like to believe.
Oh, okay. Tell us.
Now, and that's been kind of the misguided piece of information. So at the end of the forbearance period, you have to just start to become current on your loan. What I mean by that is if your monthly mortgage is $1,500 and you weren't paying that for a year, you've accrued all this $1,500 times 12. Now, once the month 13 goes and they go, okay, can you start paying your mortgage? Yeah, I can pay my $1,500. Then they'll deal with you. They could distribute it over the course of over the course of the next few years. You're adding a little bit extra to your payment, or depending on who you have as a lender, they could put it at the end of the loan. Okay, so when you sell your property, refi, all that money's due. Now that's provided that you can start making your normal mortgage payments. All right. So this is the thing. People are thinking, oh, they're just going to put it back on my loan, everything's going to be good. Well, it's only if you can start paying your loan again after 12 months. You see your normal payment. So at the end of the 12 months, if you can't pay your normal payment, they're going to go, maybe we'll do a loan modification. Do you have any income? Well, what's going to happen is a lot of these people, because I talk about forbearance, study it quite a bit. A lot of the people in the forbearance program are like, they were in it originally for 6 months, and they had to re-up again for another 6 months. So you see, it's almost like this. The majority of the people in the forbearance, I think when they come out, are not going to have employment, or they're not going to have the finances to continue making their regular mortgage payments. So the lenders are going to go, well, you don't have the income. Any unemployment or stimulus income is not truly counted as income when you're doing mortgages. So what's going to happen is they'll start to fall in the foreclosure bucket. So that's the whole thing. Like I believe 3 million, like there's about 3 million people in active forbearance right now. Okay. It ebbs and flows every week. People are coming out, people are coming in, some are paying off. Like it's like a fluid number. But in the end, there's about 3 million that are technically in forbearance. There's another million people minimum not paying their mortgage that are not in forbearance. Okay. So I look at it going, when forbearance is over, will 3 million people magically be able to start paying their mortgage payments? Mm-hmm. Probably not. As much as we see some statistics saying our income is getting better or our jobs seems getting better. On the flip side, more and more people are getting furloughed. Their jobs aren't coming back. All the airlines are putting more people off. Like there's a lot of carnage going on. So I look at it going, this current group, the majority have already done their first 6 months, and they've had to extend another 6 months, which to me doesn't bode well for that next 6 months when it ends, that they're going to be back on track. So that's where. So it's a very long way of answering the question, saying I think the majority of the people in forbearance are going to fall into a pre-foreclosure status because they have no choice. And after the 12 months, there's no other option for them to work with their lender because they don't have the income to pay a mortgage, you see?
Okay, we got Mitch Madden again from Oregon saying, Randy mentioned in a recent vlog that many people have extended or reapplied forbearance.
Yeah, and that's exactly what I was saying. So when you take a look at it, I did that. I mentioned that about 75% of the, I think it worked out to about 75% of the current number of active forbearance are people that had to re-up. So they had their first 6 months, and then they went, oh, I still can't make it happen. I'm going to extend it another 6 months. So like 25% are still on their first term of forbearance. 75% are on their subsequent term.
Oh.
Okay, you see? And when that subsequent term is over, it's over. You only get 12 months of forbearance, you see? That's why I'm saying that. So when that's over, that's when the problems start. You see?
Now let me throw something out there, Randy. This reminds me of the interest-only mortgages that they did in Australia and in London. Now, did you know that the magic year is actually 2020, when a majority of the interest-only mortgages will have to go on mortgage payments to pay down the principal? Yeah, 2020 was the magic year where there was several million mortgages that were on interest-only mortgages that were going to come due in 2020. And that is scary, especially people in Australia that are living off that government thing that they call, I forgot what the name was. There's a name in every country for it. And now they're running out too. And they're going to be at the end of November is when they totally run out of this support. So it's going to be very interesting to see, especially with a lot of homes coming out of the interest-only mortgage program, because everybody that got into a house in Australia were kind of how do you say, stretched out, very leveraged. So that's why Australia right now, a housing home GDP, like per family, is 213%.
Wow.
Right. Wow. Last month or 3 months ago when I made a video was 203%. Right.
Yeah.
It keeps going up. So the average home, for every dollar they make, they got to pay back $2.13.
Yeah.
This is
not gonna
crazy,
work.
Randy. Now imagine, just imagine. Interest rates go up to 2% in Australia. The average home, $1.4 million. Buddy's got to dish out $133,000 a year to make that mortgage payment.
Yeah.
Or $109,000 depending on roughly, right? That's a lot of cake.
Yeah, it is. And I mean, what are they going to do? Can they refi? I mean, what can they do? I mean, like typically, I mean, we had that. We had interest only early on, and we had negative amortization where actually that was not helpful for a lot of people.
That was very dangerous.
Yep. But the whole thought was, well, property values are going to increase, and then you'll just refi out afterwards and get into a new fixed plan. So can all those people go into a fixed rate, or is that going to kill them? Right? I don't know.
Okay, we got Belinda from Florida saying houses here in Florida are reselling for $250,000. People are housebroke in the market for at least 12 to 16 months. I wish music wasn't copyrighted. I'd play some heavenly music orchestra playing right now saying, oh my God, 250,000 American, that's like 307,000 Canadian. Oh my God, I'd give my left nut if housing was like that here. You know what I'm saying? It would be so much better. People will be living such a better life.
Yeah.
People wouldn't be holding back on life. And it's gotten to that point, Randy, where I don't know. My conspirator or my conspiracy theory side of me saying they purposely closed this border so the Canadians can't escape. You never know.
Well, you know what? I thought of that too. It wasn't really the U.S.'s idea. I think it was Canada's idea to close.
It's all
right?
Canada, buddy. All Canada.
Yeah. So I mean that prevents people coming and I look at this too. Like, I mean, as you know, I mean, you were down here in Florida. I mean, the snowbirds that come down, right? And so if you're a snowbird down here and you got a property, are you coming down? Probably not, right?
Oh no, that's not good. Especially the people from Quebec, they can't get down there now.
Yeah, I know. So everybody who comes down to Florida, can't. So what are they going to do? And people are already talking, going, well, is that going to be like your next opportunistic wave to sell? Like, will Canadians who have property down here have to sell because they just can't use it anymore? So what, and maybe, again, who knows if it's paid off free and clear, they got a mortgage, who knows? But they may go, okay, well, I've got an asset I can't use. My money's tied up down there, who knows what's going to happen? Maybe I got to get rid of it now. And then it becomes a quick or a fire sale, right? To dump it. So who knows?
Yeah, and now corporate. Let's talk about corporate entity numbers buying up real estate, and it's become very popular in Washington State, where they're buying these luxury properties and leaving them empty. Quite a few of them, actually. Now, I want to get your response on this. There's a gentleman that lives in Shanghai that owns 144 properties in King County in Washington State. 144, 145 mixed, all mixed. And you ready for this? Ready for the punchline, Randy?
They're all vacant,
never been
right?
to America.
Oh, he's never been. Okay,
so that is happening. This has happened in Canada for years, and I'm just afraid, Randy, that might continue. I know that China's put a lot of capital flows on the capital. They shut down a lot of capital flows, and you started to see the hurt in California with that, and property started to people just couldn't afford to get on the property market in California, and that caused the mass exodus about 6 years ago when people started leaving California. About 6 years ago, started strong, and it's never stopped since, right? So who's being replaced? Who's coming in? Like, is America doing a program like Canada where they're just bringing in immigrants to consume? Is America building homes to export? Because we had Steve Soretsky on my show 2 weeks ago, who is a Vancouver real estate agent, and he was telling me that Canada is building homes for export. I mean, they don't export the homes, but they build them so people outside of Canada could buy them and leave them empty, right? So Canada export. I see the west coast of America exporting homes, but can you start seeing it in other places, Randy, or is it just my imagination?
I think right now, what we've seen is actually a slowdown in foreign investment. Okay, so there's a couple things. So what happens when the U.S. dollar is not as strong? Foreign investment slows down. Number one. Two, because of the current situation with the COVID and everything. A lot of people who normally would be coming over to purchase or to look can't, so that's slowed down. All right, and also with respect to, like you talked about, how people are buying and not being here. Well, the past few years, the U.S. Treasury Department has they identify certain, we'll call it locations in the country where they instruct title companies to report when, hey, we're doing a purchase of over $1 million. On a property via a trust or an LLC or something to that effect. You see, so they've done some similar things to try to contain the money laundering or things like that. But it still doesn't really how can I put it? I guess doesn't stop the uber wealthy from coming in and doing what you say that guy was doing. Right? I mean, that's, if you got enough cash, you're still going to buy it if you can get out of the country. But this past year. The past couple of years, China or Chinese people they've actually sold more U.S. property than they've bought.
Can I say because maybe that was Donald Trump and they don't like him or something? Could that be the case?
I don't know, but I think maybe they saw the writing on the wall. I think they saw that property was maxing, so let's take our money and run. I think that's more of the case. Like, I think, true investors, if you're a true investor, you're not emotionally attached to the property, and and I'm not talking all single family homes. I'm talking commercial, hotels, whatever. But when you actually look at the stats, like the net, something like they bought like 170 billion last year, and they sold 190 billion. You know what I mean? So there was actually a net negative, and they took out more money than they purchased, so to speak. So
I got a question here from Sergey Petronov from St. Petersburg, Russia.
Oh, cool.
He says, my two favorite YouTubers together, good show. He's asking, housing in America, what is at stake in the 2020 presidential race? So he's asking what's going to happen with housing depending on which way it flows. I think that's what he's asking.
Yeah, I think so too. I think if it's Democratic, you're going to see more government participation in the housing, which you don't want.
No.
All right. And I think if it remains Republican, and again, it's not again, it can't be. It's not always presidential. It's got to be the Senate. The Senate actually can, because all these stimulus bills that were put out by the Democrats, the Senate killed them. Okay, thank God. So that's the key. So it really is the Senate race where it's important. The Senate, if the Senate stays Republican, then housing will still be reasonable. If it goes Democrat, then I think we're going to start seeing some more wild ideas and more things going into play. One of the things that I don't, how can I put it? Like, you can see in states like in New York and California, very pro-tenant states make it very difficult for landlords to evict. Some of my viewers, a few people I've spoken to, give me some intel on what goes on in New York, and how can I put it? Like, it's like they're capping, like they've capped what you can make. Like, in other words, how much can you charge your rent, even with capex and stuff like that. So that's the problem. So
if you have a nice lush Fifth Avenue penthouse apartment, you got to have it capped at a certain.
Well, no. Like, if you rent it, like, I mean, there's more rent control things. Yeah. In other words, say you buy a multi-unit place and you want to raise rent. Well, there's going to be a cap on how much you can raise rent. And sometimes the workarounds for that has always been, well, we just put $1 million in to improve the property. We need to get that back. Well, they're even trying to sort of pull back that type of stuff. So it's just I guess from a political standpoint, you don't want to see government get involved or control. But when you look at those big cities like an LA and New York, that's where you see there's more participation of the government, and things are tougher for landlords and developers and stuff. You know what I mean? So which hurts.
Okay, I got Marla from Sydney, Australia. She's saying that USA Today published an article. So first she says, Mike, ask Randy. Great guest, by the way. And she says, Mike, ask Randy about the USA article. And then she sent me a link. I just opened it on the side here. More than 6 million households missed their rent or mortgage payment in September. Out of work Americans delay their mortgage.
Yep.
So she wants to know about that. How much of impact do you think this will happen? Because this article's from 3 weeks ago. What's the aggregation for it to start to see?
Okay. Well, in that capacity, now what they don't really tell you though in that article is that how many are renters and how many are homeowners. So what is rent and what is a mortgage? Okay, but we can kind of figure that because we know what the forbearance numbers are and stuff, right? So you think about it, if you got 3 million people in forbearance, okay, maybe you got 3 million renters. I don't know. Like, I mean, you got to do some rudimentary math, but I do think that those numbers are always underreported. And I think I do believe when I'm trying to think on some of those articles, I think they're just talking about they do a sample of apartment owners. Like, in other words, I think that information comes from apartment owners, like multifamily complexes. So it doesn't factor in mon pod landlords that own single family homes or triplexes and duplexes and things like that. So that's why the numbers are so skewed. For me, Mike, everything is underreported. So if it's 6 million, it's going to be more.
9.
If there's 3 million forbearance, there's really more people.
5.
You see, yeah, because that's part of the narrative. And I like to, when I talk on my channel and I talk to you and everything, I like to back up what I'm saying with statistics and numbers.
Of course.
It's reasonable, right? But I'm looking, going, things aren't making sense. And now when I understand, what have I learned this past year on this medium is the narrative, right? In other words, the narrative is being controlled, so we're only seeing certain things. And I do believe that, as we know, as like anything, when there's an election year in which we just saw that narratives were very controlled, and I know a lot of this is being downplayed because they didn't want the American public to be alarmed by how truly crappy it is out there. You know what I mean?
Okay. Randy, intermission, real quick.
Sure.
I'm going to open up your channel here for everybody to see. Let's go to Article Scan. We're going to a 2-minute intermission. Randy's got his water bottle there. Let's go to Article Scan. Here it is, guys, again. Randy Patrick channel. Guys, I'm going to give you guys a link to the channel. Respectfully, I would like everyone to go there and subscribe, please. There's enough of us watching this and on replay to get him way over 22,000 subscribers. Let's get that done, please. It's hard. It's good. It's really good to get good guests on. And I really appreciate him taking his time out of his busy schedule to be here with us tonight. So go over.
Mike, I certainly appreciate you hosting tonight. So this is a great experience.
This is like episode 200. This is going to go until I'm in the ground, buddy. There's always going to be a housing a housing phenomena. So let's get you back on screen here. Let's get you back in CNN mode here, like you're on the news. Okay, so I have Bethany here from Melbourne, Australia. She messaged me to tell you about. I covered an article on my channel about. She wants me to talk about the food bank vouchers for homeowners. Okay, so Randy, before COVID, a few months before COVID, Australian banks were getting like vouchers to give to customers because they couldn't afford to pay their mortgage and buy food.
Okay.
So homeowners were given vouchers so they could go get food from the food bank so they don't starve. And she wanted me to bring that up to you to see what you think about that, because that's how bad it's gotten in the Commonwealth.
Wow. Well, that's kind of like what happened here, because we had the stimulus checks, right? So that's what we got going on here. So we kind of did the same thing. If you didn't have to pay this is the way it worked. You didn't have to pay your rent or your mortgage. You still got your stimulus check, and you got to buy your food. So I guess so we kind of, I guess I wouldn't call it a voucher, but the thing though is that, well, let's step back. If you had the voucher in Australia, were you still required to pay your property, like your mortgage?
Yeah, you had to pay your mortgage. So when they did a cash flow on the customer or the person, they would look at the cash flow and say, oh, okay, we see what your problem is. You just can't afford to buy food. So for you not to default on your mortgage, here's a bunch of vouchers from the food bank. But the food bank should go to people that don't own a $2.4 million house that's realistically worth $90,000 in Tennessee. But, you know, I'm just kind of throwing that out there. When I say $2.4 million house, Randy, you probably think of this palatial mansion with swimming pools and multi-levels everywhere and huge columns and this light coming from heaven down in the entrance. No, it's just like a house, like a normal home. And you'll be like, what?
Yeah.
But, we have Jono144 from South Africa, from Johannesburg, is asking, ask Randy, Mike, if prefabricated housing market could be the current future for America to sustain affordability. That's a good question.
That's interesting. Well, funny enough, I've seen some prefab stuff. As you know, we're in Florida, so what do we have in Florida?
Hurricanes.
Mobile home. Yeah, and we have mobile homes and manufactured homes, right? And speaking of which, it's whistling outside right now, let me tell you. So you can hear it banging against the window. I think it's actually going to go further than the prefab stuff, because the prefab stuff actually is not that inexpensive, all right? I did some research on this, and I found that, you still have to have impact fees and, hooking up all the utilities, and you still have to do, there's a lot of stuff that still has to go with a prefab home. So in the end, it wasn't like you were saving a lot of money. Where we're going to see some of the opportunities is going to be in things more like container homes, okay? Like, in other words, where we can use, like a shipping container. I know a couple of guys who are doing that, and that interests me, okay? That could be something for the future, because that's much, much cheaper material. But here's what it boils down to. Nothing will happen unless zoning flexibility will change. And that's the big issue. So like anybody, if you live in a neighborhood, and you're in a nice single family concrete block home, you don't want a prefab home going in beside you, right? Because that implies that I'm devaluing my home because this is a substandard structure for the neighborhood. Okay, so that's a big thing with what's happening now. I know California has some zoning stuff going on, and that's like what they want to do is they want basically to say anywhere that there's land, we can put multi-units on it. All right, so they don't want that, because that ruins the neighborhood composition, which ultimately ruins your property value. So there is a big that's where when I talk about government getting into homes or real estate, that's where we're going to see some problems. So the government might come in and make some wholehearted changes to say we're going to allow this, and then the people are going to go, you've just screwed us over. So you were okay having us pay, having higher priced homes, us paying a premium on our property tax, and now you're going to devalue my home because you want to, because now you have to have more affordable housing. So it's going into the suburbs. It's how that's going to change. That's That's the problem. So it's going to be a different dynamic. So, but I guess again, I always spin around here. But to answer the question, I think what's going to happen is we have to find alternative structures. Like, in other words, like, why are new homes so expensive? Because land costs, entitlement costs, development costs, impact fees. I mean, when I talk impact fees, those are, okay, you don't have water, sewer, and electricity at the lot. So to bring it in, when you're a new home builder, you have to pay a one-time impact fee, which pays them to bring that there, but also has layers of, some of it goes to schools and infrastructure, whatever.
The
So
municipality.
it's all layered up, right? And then like Canadian lumber, very expensive. What's you got to take a look at that. Like, what's also happening with all these wildfires in California.
Can I tell you a quick Canadian lumber story you're not going to believe? Like,
Sure.
really quick.
Yeah.
In Canada, my friend was building a house recently. He actually had to import the Canadian lumber from America and ship it to Canada and pay the duties because it was cheaper than buying it locally from the lumber mill down the street.
I bet you. Yeah.
Go ahead, continue. Wildfires.
Yeah, I know, because not a joke, right? And that's the thing with Canada. We don't even, anyway, our own resources we have to get from somebody else, right? Yeah. That's a pet peeve. Yeah. Okay, but yeah, so the wildfires. So like people look at, so the wildfires, of course, on the West Coast, that's going to impact lumber pricing, right? Mm-hmm. And what happens is, when, of course, that's all based on lumber's future. So a lot of housing analysts also look at lumber futures as a trigger to see how the housing economy is doing and see where that bubbles up as well too. Mm-hmm. See, so that's another thing to talk about. But I guess in the end, we need alternative things. Like, I guess in the end is this question boils down to, how do we push home prices to be cheaper? That's the question.
Well, right? That's the next question right here from Reddy Hernandez, who was born and raised in East LA, and he's stating that the average home price in California is almost 250% above the national average. Are my employers going to start paying me $85 an hour to catch up, or do I have to leave the state?
Sayonara to California. I think that's been very clear. I think a lot of people are just, and I get that comment. I get, people commenting or telling me this on my channel. I get a lot of emails, people going, I'm doing this. What do you think? And it's like, and it's like, you do the math, but it's not only that you can leave and sell your home and be cash out. I think, as you said, it's more of if I want to buy a home, I can't buy one unless I do leave the state. And that's the thing. So if you want the dream or the security or the ability to have your own place, which everyone should be able to have that at some point in time in their life, you're probably not going to do it in California. All right. That's where we are today. It's just not going to work,
We got another question from somebody from San Jose, California. It's just a bunch of numbers. Their name is just a bunch of numbers. They're saying, ask Randy if he knows about the law that's changing this week. A new law in California will give individuals and nonprofits and governments a chance to buy foreclosed home before investors can scoop them up.
Well, I've heard about that. That's just a proposed law.
Oh, okay. It's one of those. Let's talk about it.
Yeah. It's not going to. I don't think it's going to pass. Or like, here's the thing. The whole idea is that you want to beat the hedge funds before they pick it up at the auction. Okay, mm-hmm. But the point though is that would have to be already foreclosed on, and mm-hmm. foreclosure is already a law in place, and at the auction anyone can bid on it. You see, so. There's more to layers to that, I believe, but I saw that it was proposed. It's not. I don't believe it's going to come into play because that's against how the economy works. You see how the current economy works. All right, hedge funds and big businesses buying homes at the auction like that. That's the supply of the homes, the renter homes.
Mm-hmm, mm-hmm. Sorry, I'm just looking at 3-4 screens here at the same time. It's kind of tough running this as a one person.
I was gonna say.
It's kind of
you got to get a VA going on there. So
yeah. Wow, we got a lot of people watching tonight, guys. Thanks for tuning in. And then on our other platforms, we got close to 544 people watching on that one.
Woo!
Yeah. Oh yeah. And we got almost 200 watching on YouTube.
You drive the traffic, man. Cool.
Oh yeah, it's good. It's good. We got another question here from Alberton. What cities are at a high risk of popping? Would it be fractional decline, or will it be across the board, across the country, if there is a decline or correction in housing?
Okay. Back a couple years ago, I was really thinking it would be a national situation. And, like everything, we were given curveballs. So I've changed my tune to that. And I'm going to call them metro bubbles. So I'm going to coin the term metro bubbles. All right. So some markets are going to do well and some markets are not, because we're seeing a wealth shift. We're seeing a relocation shift. So that's going to be the dynamic, is that some markets are going to take a bath and some will do the exact opposite. They'll grow or and then how can I put it? Like, they'll eventually become their own bubbles as time goes on, you see? So it just depends where people want to go. Like, for example, Boise, Idaho. To me, that's going to grow. But there's going to come a point in time where people are going to go, you know what? We've tapped this market out. We can't, we're not going to pay these prices anymore. It just depends on when, I guess you could say, relocation and the movement stops. But the big cities, the big coastal cities, for sure, the New Yorks. I mean, listen. I haven't even talked about this yet, Mike. But I talk about the FHA delinquencies, and
Tell us.
you go. Okay, well, we've talked a lot about FHA loans. So
Right.
part of the problem with the FHA loan, because they're riskier, they're like our sort of new subprime 2.0 loan segment. Well, they're manifesting out now. So there's a lot of reports are coming out showing that 17-18% of all the FHA loans that are out there right now are delinquent.
That's
right?
dangerous territory.
Well, yes, definitely. You see, and then when you start looking at where where these delinquencies are happening, so like say in the the greater New York area, 25% of their FHA loans are delinquent. All right, Long Island, Nassau, Suffolk County, 27% are delinquent. Okay, New Jersey, 26% delinquent. Fort Lauderdale, 23% are delinquent. You see, and that's that's just one loan segment. That's not Fannie or Freddie or conventional. That's just the FHA-backed loans. So now, again, we know that they're a little different standard, little lower standards. That's why the exposure is there. But you see, it just shows that. To me, that's my almost like my template right there. Is that I think I can match up. You can match up housing bubbles and where it's gonna collapse with the FHA loan high delinquency.
So you kind of backtrack it and retrace it backwards.
Yeah.
And if you follow where the higher risk money was lent
Concentration
out,
is.
you could backtrack that and you could kind of see where proportionately it will take place if it came down to a more of a patternized collapse as opposed to like a nationwide collapse.
Mm-hmm.
Okay,
Yeah, I can actually take it. I can actually take it down to the zip code level with the data that I have.
What?
So, oh yeah.
Wow.
Yeah. I was actually before we got on Skype here. I was actually going through my area because I'm trying to build a matrix where I can get the whole Tampa Bay area and find out what I'm trying. I'll tell you up front because it's not that big a deal. But I'm plotting. I want to plot FHA delinquencies by zip code, and then I'm going to go to my foreclosure data. I'm going to look at my foreclosures with the same zip code, and then I'm going to then I can almost plot going, okay, here's the and rank them as risk levels, and that's where you market to for distressed
And then
properties.
you set them up into different categories so you could read it better and you could flow it through and create some sort of an easy to read flow chart for the average guy like myself could look at it and say, okay, I'm seeing this. Okay, this makes sense. Okay, there's deleveraged. Okay, they're over leveraged. Okay, there's high risk. Okay. And you could even probably break it down by credit score. 675 to 700, 750 to 820, and then see the higher risk or the risk going up as you go down the credit score.
Yeah, they don't have the data like that. Though.
Yeah,
They just,
I'm saying for,
But you could, if you knew that data for sure, yeah.
Okay, we got Keep It Moving from Long Island saying property taxes on Long Island start at $15 large a year for a small 3-bedroom home and go into the millions a year for a $30 million home. 15 large, Randy, for a 3-bedroom home.
That area is getting beat up. It's getting beat up with property taxes, getting beat up with FHA delinquencies. It's getting beat up with normal foreclosures and and things like that are stacking up. So it's that whole area is a tough area. It really is.
Mm-hmm. We got Jonathan Pickering. Jonathan Pickering from New Zealand says, I see a flurry of foreclosures in 2021. And he states that, Mike, I see the demand for housing, but there's also a high risk of losing it.
Yeah, well, the whole point, though, is that every real estate investor or large hedge fund is vulturing, waiting for this to happen. So that's why, when we talk about this, it's almost like it's preordained. Like, in other words, the hedge funds are not going to go out and buy property they're going to convert into rental units at the top of the market. Why would they do that? There's no deals there. So they're going to wait till everything crashes and they can pick it up distressed at the foreclosure auction and buy it much cheaper. That's the whole point. So that's why, as we said earlier, the dry powder, everyone's waiting.
I love that name, the dry powder.
Dry powder.
I call it sugar substitute.
Hey, do you watch Oak Island at all?
Is it on Netflix or HBO?
No, it's a History Channel. So The Curse of Oak Island.
Oh, that has to do with that buried treasure or something.
Yeah. Because that's like I think dry powder. I think like these dry powder kegs in a boat. You know what I mean, like the pirate ship type thing.
I know exactly what you mean. And they
Yeah.
Okay. There was a question here from somebody. A lot of people liking the show tonight, by the way, Randy. A lot of people saying this is an amazing trends in the housing market tonight, and.
Between your knowledge and my knowledge, we pretty much covered the world.
My knowledge is a little bit more on the street level, where I kind of see things, and I could kind of take into perspective where things are headed by just kind of looking at the patterns and connecting the dots, and kind of. So it started in Australia and Canada and California, of course, and it started getting bigger, and then. The problem is that a lot of people are being forced into homelessness in Canada, and it shouldn't be like that, Randy. Like, back in the day, I know you remember this because you were living in Canada at the time. All you had to do in Canada was just have a job, and you had everything.
Yeah.
Now, the average wage, a decent wage nurse can't afford to live in Canada anymore, right? And I don't know what to do. I don't know how to kind of guide people to more or creating awareness is nice, but I also want to create more solutions, right? And they're very limited when you got so much, like you said, government intervention. And now if the Democrats take over, they're going to put more government interjection into housing, because that's kind of what happened in, again, Massachusetts, Illinois, Oregon, Washington State, and California, right? So I'm afraid of that. I'm afraid of America becoming the United States of California. And that's what I'm afraid of. Because, Randy, once we lose that beacon of light, once we lose that America, it's lights out for the rest of the world. Like, you guys are the last frontier of freedom that we look up to. You know what I'm saying?
Well, half the country doesn't believe that or doesn't want to believe that down here. So, that's unfortunate. But yeah, I mean, there's more at stake than people, people don't realize that. They're just concerned about who I don't like or who you don't like or whatever. But they're not looking at the big picture. And that's where I try to tell people going, socialism is not always the way to go, guys. You know what I mean? And I mean, I can tell you, I mean, we know how it works. I mean, a lot of your viewers here are from, like New Zealand and stuff like that, where it is more socialist, and you're paying more for gas, you're paying more for alcohol, you're paying more for just to live. You know what I mean? You're paying blended sales tax and provincial tax or whatever. It's tough, And when I tell people what things cost, when down here, when people think, you can just get free this, free that, I'm like, no, you can't. You know what I mean? And we pay for it. We pay for it in ways that, what's gas per liter now, right now?
I think $1.35.
Okay, yeah. I think I filled up for $1.75 last week, a gallon.
A gallon.
So,
yeah, that's a lot.
Gallon,
yeah, it's a lot cheaper, right?
Yeah.
But like for us, I mean, I don't know. I don't know, Randy. If you trends in the housing market last week, there's an article that I've brought up several times. Farmland in Richmond, British Columbia, appraised at $76,000 in 2016, sells for $9.1 million in 2019. 100 times over its Chinese corporation bought it 100 times over its asking price.
Yeah.
And that's been really bad. I think with Trump going into office in America, it's pushed more foreign investing into Canada and Australia.
Oh, definitely.
And that's caused huge major issues, Randy, because we just don't have the cities like you guys do. We don't have the infrastructure like you guys do. And I just wish, the protesting and all this divide in America, I kind of wish they were protesting and fighting for, like, not for free stuff, but for a livable wage, keeping affordability within check, so people are not bought out of their own markets, because we lost it here in Canada. I don't know what's going to happen in the future anymore. Like, to be honest with you, my way out, Randy, is to send my kids to an American university or college, so then they could apply to stay.
Yeah.
While they're in school, and then this way they have a way out, so they're not stuck in Canada, right? And then that's like a lot of Canadians are thinking like this now because of the situation we're in right now. And I just wish people in America could know how much we struggle just to pay rent or just to keep a roof over our head.
But that's the problem. You see, Canada is almost looked at as mythological with respect to it's a different lifestyle and everything's free and socialized medicine, everything's good, you see. So it doesn't, it's always the grass is always greener, right? That's how everyone sees it. And it's a tough call. But you know what though? Coming to the US, if we want to keep on the real estate theme here, real estate or housing is a vehicle to get to the US. So if you want to get an immigrant status, whatever, as I mean, there's, if you do it legitimately, there's, you buy property or you buy business with the property, whatever, like there's ways that you can invest in real estate in the U.S. and eventually get a landed immigrant green card holder, eventually citizenship status, if you wanted that.
Texas homeless shelters are over limit. Right now, this is coming from Davis 114. He's an employee for the Texas Department of Housing and Community Affairs, and he's telling me, Mike, tell Mr. Patrick that there's nowhere for the homeless, and the homeless is increasing in double-digit percentages. I've never seen anything like this in my life, working out of this department for 19 years.
Okay. Maybe he could respond. Does he believe that homeless are coming? Is it just more Texas-based homeless?
No, because this guy emailed me a few months ago saying that he's seeing people going to the food bank now that normally had a good 9 to 5, you know what I'm saying, that had a decent lifestyle. Now they're going to the food bank, and then from the food bank, a lot of people are now becoming homeless.
Okay. So it's localized, because I know that a lot of people, they're shipping homeless out of certain locations. You know what I mean? Like I know. Bus tickets to get the heck out of California, or whatever, and ending up in Texas, or who knows, right? But that's a net result of what's happening. That's the overall economy, and the fact of the matter is, how can I put it? Where I think government intervention should be is in homeless shelters and things like that. They shouldn't be telling landlords, you need to give part of your equity to your tenant. They should be, taking that money or doing programs or getting grants or whatever, we need to build more infrastructure for homeless and the very, very low income. That's required, but so we need that, and we demand that as a society. Yet on the flip side, we make it cost prohibitive. Like, what real estate developer is going to do that, and like it's all cost benefit, right? Like, in other words, it's got to make sense from a financial perspective. So there's goodwill and there's contribution and charity, but when you're building facilities for people to live, it's expensive, and a lot of it is the government red tape and infrastructure and impact fees,
bureaucracy, and all that stuff.
Bureaucracy, yeah. So if we can cut that out. But what we're seeing, though, I've seen a couple of things too, which refer back to the guy talking about the manufacturer. Like, we are starting to see some innovation coming in play where maybe some of that does work, and we do take the containers and make, because a shipping container is a nice 1-bedroom little house for somebody, apartment. Okay, so I mean, I've seen that there's been some of these communities kind of being constructed for that very reason. So there's hope there for sure.
But Randy, you know how illegal that is in Canada? Like if we want to bring a shipping container to Canada, I had a guy I was talking to lives in the interior. He wanted to bring a shipping container to use it as a shed, and the amount of red tape in Canada. Canada is like, open up your checkbook. We need $9,000 for this, $13,000 for that, 22 for this. And that's all Canada is. That's all it's and anything that could benefit somebody always becomes either illegal or against the law. And it starts you start seeing this destruction, right? And I have here somebody who's actually been somebody. I just got a message here on Skype from somebody who lives in southern New Zealand who says, Mike, I'm selling my home. It's been appraised at 1.9 million New Zealand dollars, which is roughly 1.6 or 1.58 million American, and I'm moving to northern Texas, North Texas, and I'm picking myself up a home for under $300,000.
Yeah.
So he's left with $1 million, $1.2 million in pocket.
Yeah. He's probably just going north of Dallas, Fort Worth area. Probably,
yeah, that's what he's looking at. He emailed me a few weeks ago too, and he showed me his house. He said it looks like a trailer, Randy. And
like in New Zealand or in Texas?
New Zealand, yeah.
Okay, yeah.
So basically, he could sell that, and basically, he has a little piece of land, not worth much. He said that piece of land. Let's say if he was to buy it in Fort Worth, he could probably buy it on his credit card for $2,000 because it's not a big. But unfortunately, this is what we're going through right now, and then just like you said, what's made me scared is the government regulation that's going to start coming into play for housing, and that's why I'm kind of projecting a big upside in housing next year. Maybe I would say the grand melt up before it turns into a toxic economic dumpster fire crisis until it really gets bad. I can see that happening, Randy. I really can. Because we went through it in New Zealand, we went through it in Australia, we went through it in the UK. Randy, do you know there's more food banks than there is Subway sandwiches and McDonald's in England?
Really? Holy
together.
Cow.
Yeah.
Yeah. Wow.
Yeah. So that's how bad it is right now. I had Maneko64 on my channel, the gold and silver guy from London, England. He's really good with the economics and stuff on what's happening in England and Brexit. And he told me there's no Londoners living in London anymore. The locals don't live there. It's empty. It's an empty shell. And again, they've created these artificial shortages, and landlords have been wealthy on paper, but a lot of companies had to leave London because he said nobody could afford, the people that they want to hire to work there can't afford to live in London. So they had to relocate to Middle England.
Sure.
Or even some companies had to move to Ireland because they couldn't afford, the taxes and the taxations and stuff. So, yeah. How long have we been talking, Randy? Holy crap.
These cosmopolitan cities, look great and sound great, but in the end, it's you're right. I think it's for people coming in with money to jump in there and not the locals anymore.
So. But what hurts in the end is the amount that people's parents, grandparents sacrificed to build that infrastructure, and then they have no part of it anymore.
No, I get it. Yeah,
it's almost sad. Like a huge betrayal.
Yeah. Well, it is. You're getting pushed out, right? What would have been a family home for 30, 40, 50 years is gone. Yeah. And now you're moving 40, 50 miles away, starting over again, right? So.
All right. Randy, stay on the line. Stay on the line. We're approaching the second hour of the show where we're going to wrap it up, but don't hang up. I want to plug your channel again. Guys, this is Randy the Man Patrick. His friends call him Rand Man, but and he's a big Toronto fan. And guys, especially if you're watching this in the United States, if in Canada, I know the Commonwealth is watching this because I'm watching the comments here. A lot of people are commenting here from New Zealand, people commenting here from Australia, quite a few from Australia, and quite a bit in Canada commenting. Right now, Randy, we don't got a lot of people from the United Kingdom commenting because it's like 3 a.m. there.
Yeah, it's a little late their time.
So they watch the replay. So I'm going to give you guys the link, and I'm going to ask respectfully that you all go there. And please subscribe to Mr. Patrick. Please go over and subscribe out of respect to him coming and taking his time to give us a good insight on what's happening to America the Brave. And again, America to me is like the last beacon of hope for us, right?
I know. It's
And
sad, isn't it?
I don't know what to say if and that's, I watched this current election very closely because there's a lot at stake here. Australia is a sitting duck now without a certain person in power. That certain person stands up to certain countries.
Hmm.
And Australia right now is sanctioned, Randy, to death now by the Chinese. And a lot of people don't
Oh,
know
really?
that. It
Really?
makes
Yeah.
the Iran sanctions look like a walk in the park, what the Australians are going through.
Wow.
Yeah, a lot of people don't know. You can look it up, Randy, on Google. Just type sanctions, China, Australia. You're going to be blown away. You're going to be like, what is happening? And yeah, yeah. And I wanted to kind of let you know that, because there's a lot happening across the Commonwealth, and it's the same patterns. And I really hope to God that He hears me when I say I really hope America doesn't become Amerifornia.
Oh yeah, I know. It's listen. I think a lot of the people have realized that now, and you can when you see. I don't know how to put it, but I mean, I guess people are just they're getting fed up now. That's the situation. And we'll see how it plays out over the next couple of weeks. But almost like every other person that I see on Facebook, it's like, yep, I'm moving. I'm out of California. I'm moving.
Yeah.
Like they just don't want that, and that they don't like their governor. They don't like and a lot of it is housing too. Going, we can't do this, or we're not going to have this. Landlords, like I don't even know how you could be a landlord in California. It just seems so onerous.
Yeah, especially with the amount of bureaucracy, red tape, and
Oh yeah,
it's, yeah, yeah.
yeah.
All right, guys, watching across the Commonwealth, I'm going to let you guys go now. I'm going to have a few words with Randy before I let him go. Guys, I want to appreciate you running into our second hour. I really appreciate you guys taking the time to come out and asking Randy questions. Please go over to his channel out of respect, and please. So we got a lot of people from Melbourne giving us a thumbs up, from all over the Commonwealth. Please,
Cool.
please go and, especially if you're living in Australia and want to exodus to America, Randy's your man. Go to Florida. I live there. It's a lot better than what they show you in Miami Vice. And
No kidding. Yeah, you want to avoid that area for a bit, but there's tons of room in Florida.
Yeah.
A lot of great places. So yeah.
all right, guys, thanks for watching, and you guys take care. And I'll see you next week on Trends in the Housing Market. And next week, same time, same place. And don't forget to set your reminder